This episode of On the Record is brought to you by Benzie. I'm Executive Editor Kim Schmidt, coming to you from Madison, Wisconsin at the 10th Dealership Mind Summit. Welcome to On the Record. Here's an update on what's currently impacting the ag equipment industry. The Federal Open Market Committee, the policy-setting arm of the Federal Reserve, voted unanimously to hold interest rates unchanged at their current 5.25 to 5.5% target in July. Diane Swank, Chief Economist and Managing Director with KPMG Economics, said the statement following the decision was more hawkish than many market participants hoped. There were only minor edits to the language regarding progress on inflation and the prospects for rate cuts. I caught up with Greg Roberg, Vice President of Sales at AgDirect, here at the Dealership Mind Summit, who says he expects we'll see 2 cuts by the end of the year, totaling about 0.5%.
Great question. So I'd say Chairman Powell and the Federal Reserve in general have been very methodical in saying we're going to just wait and see what the data tells us. And so now we've had a few months where job reports have been a little bit less than expected. We've seen inflation start to slow down a little bit. And so I was not surprised. AgDirect, our parent company, Farm Credit Service America, was not surprised that they decided to hold steady. It was some good news that they said there is a chance we'll take a look at it in 24, maybe when we get together in September, which is I think mid-September. So we'll take August off. They meet 8 times a year. So we'll meet in September and then November, December. And so right now there's an 83% chance that they'll cut rates in September, which will drive the prime interest rate, which is operating, but then also you should see fixed rates go down. 83% chance is what all the economists right now put it at. Will it be a quarter? Will it be a half? I would put the money on a quarter, and then that gives them a little opportunity, whether in November, most likely December, to go down another quarter. As a company, we're saying somewhere between 2 and 3 rate cuts conservatively by December of 2025. I think I'd take the over on that personally, but I think we'll get at least 1, if not 2 cuts by the end of 2024. So maybe 0.5%. Okay. In total. So that's good news. I think all of us would probably rather have $5.50 corn and $15 beans, but that's not on the horizon. But if we can get 0.5% or so on interest rates, start getting rates back in maybe the low 6s, dare I say in the high 5s, I think that would just create some very positive vibes in the market, particularly for farmers maybe thinking about upgrading equipment.
The Ag Economy Barometer from Purdue, released August 6th, shows that rising interest rates, while still a concern for farmers, did see a drop in the percent of farmers who ranked it as their biggest concern. This week's dealer on the move is Parallel Ag. The AGCO dealership, which has stores across the Midwest and Southern Plains, announced it has expanded and is now offering the full Fendt and Massey Ferguson lines. The established locations in Marshall and Montgomery City, Missouri, will each feature the full line of AGCO agricultural products. Parallel Ag will also expand its coverage from northern Illinois into southern and southwestern Wisconsin. Now here's Noah Newman with the latest from the Technology Corner.
Thank you very much, Kim. Yeah, it's time to honor the hardworking people making today's precision farming systems possible once again during the 2nd annual Precision Specialist Week. It's taking place August 11th. And to shine more light on the importance of this week and the hard work that all the precision specialists do out there, here's Lessiter Media President and Farm Equipment Editor, Mike Lessiter.
We've been serving farmers for more than 50 years here with our publications. And since we got into the precision farming dealer space many years ago, we've come to learn the success stories and the how that precision specialist saved a planting season, a harvest season, was there on call in the middle of the night, and really went well and beyond to keep that farmer moving. And as we learned of these, we wanted a chance to celebrate the precision farming specialist, who's really the go-to for many farmers at their key point of year. They simply couldn't get it done without these guys and gals who move forward, put their own life on hold, and make sure that farmer can keep going. It is sometimes a thankless job, long hours during planting, spraying, and harvest, but this is our way of recognizing those who are behind the scenes really making agriculture go.
And if you'd like to nominate the hardworking precision specialist in your life, head to farm-equipment.com/PSWeek. In the Technology Corner at Dealership Mind Summit and the National Strip Tillage Conference, I'm Noah Newman. Back to you, Kim.
Thanks, Noah. A manufacturer who provides OEM work to other farm equipment manufacturers told AEI that ag is on the fastest roller coaster ride downturn in a quarter century, and that a handful of its OEMs reduced their schedules in the first week of August. He said he's never seen this sort of panic in a 10-day period. He said usually the OEMs are dialed into their needs by July. Now they're wanting them to provide inventory terms well beyond the 8-week firm zone when historically they can't just cancel orders. In the supplier business, he said they need to plan for their needs 6 months ahead of time. The executive pointed to 4 reasons for the increased concern beyond what's normal in an election year. First, equipment dealerships are so big now that they don't have stock to make things happen anymore. He said when a 5-store dealership was typical before the huge consolidation dealer groups, a farmer would go to a couple of different stores, get the price, and buy and be done with it. But he said now that doesn't happen anymore. They don't have the stocking units nor the motivation that it brings. Second, he said today's salesman at the dealership is just a middleman. If the finance guy doesn't want to approve a farmer for the sale, it doesn't happen. It used to be that the salesperson would push and negotiate and do whatever it took to get the deal done, including discussing future trades. That doesn't happen anymore, though. Third, he said grain prices fell faster than any of us expected, and he thought we'd see a rally by June or July. Guys are selling their 2025 crop now, thinking the commodity pricing could get worse. And finally, most farmers currently don't need the new equipment. They can run with what they've got. Used equipment inventories remain elevated, and while they're not as high as they were in 2023 and early 2024, Andy Campbell, Director of Insights for TractorZoom, says it's still too much pressure for this market to take. As has been the case, used combines continue to be the biggest problem, Campbell says.
So we've seen combines drop anywhere from maybe a 12% up to a 30% in value. And so combines have been the problem from 23 now into 24. I've been tracking a lot of combines, the S780s especially. I think we had 70 sell on TractorZoom just in the month of July alone, just the S780s. But the interesting thing there is from June sales to July sales, we're not seeing those decline from June to July. It more or less stair steps. So late 23, we saw S780s down a little bit. And then as soon as you move into the springtime, so your January, but especially February and March, those sales, they dropped another 6 to 8%. Then you have a little bit of break for planting, and then you had June happen, another 6 to 8% drop in those. But at least for those, the S780s have been consistent from June and July, and I'd expect them to go the same through August. But you're going to have another break at harvest. And so if things go the way they've been going, there's still too much in the market. They're going to probably drop again. I don't know if it'll be another 5 to 8%, but I would expect those Class 8 combines to continue to drop. So Class 8s have been the worst.
But Campbell says what he's most worried about is high horsepower 4-wheel drive tractors. He says they've held their value well late into 2023, and values were still pretty decent in the early part of 2024.
I think we could see some downward pressure on large 4-wheel drive tractors. And then in this summer, larger row crop tractors, especially the 8R series from John Deere, we're seeing those week by week just continue to drop. And I just looked at the 8R 410s, the 8R 370s, and just from June to July, we're seeing 6 to 7 to 8% drop on just that models in that shorter period of time.
There's a drop in pricing?
Drop in pricing, yeah. And the volumes of those are high, but they're still row crop tractors, so they should sell, throughout the season, and they're kind of the cornerstone of the market. So they're usually not that high risk of an item. They are a little higher priced, but it's a little concerning that at auction, we're starting to see those be discounted by that much that quickly. And so there'll be another thing. They're usually not a high risk item, but I will be watching those post-harvest late in the year to see if they continue to drop at this fast of a rate.
This week's DataPoint is brought to you by the Farm Equipment News IQ quiz. According to Ag Equipment Intelligence's 2024 brand loyalty report, farmers are split on whether the current ag economy impacts their brand loyalty. Overall, 51.6% of farmers said they would consider other brands in the current ag economy, down from 54% in the 2020 report. Looking at farmers' primary brands, farmers who identified themselves loyal to Kubota equipment were the least likely to consider another brand given the ag economy, while AGCO farmers were the most likely to consider another brand. The full brand loyalty report is available for purchase on agequipmentintelligence.com. That's it for this week's On the Record as we close out the 2024 Dealership Mind Summit. If you weren't here with us this week, we hope to see you next year in Iowa City for the 2025 Dealership Mind Summit. Until next time, I'm Kim Schmidt. Thanks for joining us.